This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude futures fell marginally on Friday as investors considered oil's geopolitical risk premium amid drawn-out Russia-Ukraine peace talks, while keeping an eye on Sunday's OPEC Plus meeting for clues about potential output changes. U.S. West Texas Intermediate crude futures resumed trading after being frozen due to a system outage at exchange operator CME Group, blamed on a cooling issue at CyrusOne data centers. Brent trades on the Intercontinental Exchange, or ICE. Front-month Brent crude futures for January, which expire on Friday, settled down 14 cents, or 0.22%, at $63.20 a barrel. The more active February contract settled at $62.38, down 49 cents on Thursday's close.
Russian President Vladimir Putin has signed a law aimed at boosting domestic gasoline supplies, including with fuel produced by Russian companies at Belarusian refineries, state-run RIA news agency reported on Friday. Russia is facing fuel shortages after a spate of Ukrainian attacks on its refineries. In late September, it imposed a partial ban on diesel exports and extended an existing gasoline export ban until the end of the year. The new law amends the tax code to allow Russian companies to claim a reverse excise tax on oil processed abroad under tolling arrangements.
Moving on to the top news in the energy sector.
Oil prices are projected to remain under pressure in 2026, as swelling supplies eclipse modest demand growth, while geopolitical risks could cap deeper losses, a Reuters poll showed on Friday. The survey of 35 economists and analysts forecast that Brent crude would average $62.23 per barrel in 2026, down from October's forecast of $63.15. The benchmark has averaged $68.80 per barrel so far in 2025, according to LSEG data. U.S. crude is projected to average $59 per barrel, below last month's expectation of $60.23.
Saudi Arabia, the world's biggest oil exporter, is expected to lower its January crude price for Asian buyers for a second month to its lowest level for 5 years, tracking the decline in spot benchmark prices, sources said on Friday. The January official selling price for flagship Arab Light crude will likely decline by 30 to 40 cents a barrel to a premium between 60 cents and 70 cents to the average of Oman, Dubai quotes. 5 Asia-based refining sources said in a Reuters survey. That would mark a second monthly decline and the lowest since January 2021, Reuters data showed. Next, we have the top news in metal markets. Spot gold rose 1% to a 2-week high on Friday, as expectations that the U.S. Federal Reserve will trim interest rates next month lifted demand for the non-yielding asset, while silver hit a fresh record high. Spot gold was up 1.3% to $4,210.94 per ounce by 3:11 p.m. Eastern Standard Time, 2011 Greenwich Mean Time, after reaching its highest price since November 13 earlier today. Bullion was set for a 3.6% weekly gain and a 5.2% rise for the month, along with a fourth consecutive monthly increase. Silver climbed to a fresh record high of $56.78 per ounce, up 6.1% for the session and 16.6% for the month.
Iron ore futures prices dipped on Friday, but logged the third straight weekly gain on recent infrastructure demand. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.19% lower at 794 yuan, $112.18, a metric ton. The contract gained 1.14% this week. The benchmark December iron ore on the Singapore Exchange was 0.89% lower at $105.75 a ton, as of 0717 GMT. The contract is up 1.73% so far in the week.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade corn futures reached their highest level since early June on Friday on U.S. export demand, while soybean futures also rose. In a daily reporting system, the U.S. Department of Agriculture said exporters sold 273,988 metric tons of U.S. corn to unknown buyers for 2025-26 delivery. The agency also confirmed exporters sold 312,000 tons of U.S. soybeans to China for 2025-26 delivery. The USDA earlier reported U.S. corn export sales were 2.8 million tons for 2025-26 and 571,500 tons for 2026-27 in the week that ended October 16. Analysts had expected sales of 1.4 million to 2.5 million tons for 2025-26 and 500,000 to 1 million ton for 2026-27, according to a Reuters poll.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.